Really, it means gold and silver and precious metals firing on all cylinders. We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers. Welcome, everybody, to Talking Trades. Kevin Wadsworth, my friend and partner. I'm Patrick Karim, and today Kevin will talk about a very important, and nobody talks about this. It's these macro capital flows, and you could define it by comparing a major asset class versus another one. And in this case, we're going to compare U.S. stocks, right? The SPX versus gold. And using that brilliant ratio, you'll be able to ride the next meaningful bull era in either U.S. stocks or gold. So with no further ado, Kevin, please showcase everybody the magic of ratio charts.
Yeah, sure. Thanks, Pat. Well, as you quite rightly said there, the future trajectory of precious metals hinges to a large extent on capital rotation. And what do we mean by capital rotation? Well, really it means gold and silver and precious metals firing on all cylinders because we have had an influx of capital to the sector. Where's that coming from? Well, of course, traditionally a large amount of funding, a large amount of money, a large amount of people's investments and people's pensions and all the rest of it goes straight into the stock market. But there are times when the stock market suffers a shock. And when that shock comes along, capital seeks a new safe environment. Capital seeks a new home for at least a period of time. Now, with precious metals during the 1970s and during the early 2000s, we saw this capital rotation event. And it was initiated through, as I said, a stock market event of some sort. In fact, in both cases, stock market fell by 50% or more. And the rotation of capital coming away from stock markets and towards commodities and precious metals, it's a huge, huge amount of money there that's flowing into relatively small markets by comparison, and that has a huge effect. So I'm going to show you a couple of charts and show you exactly what I mean by that. And what we're looking at here is the stock market. It's the SPX chart over the last several decades, actually, going all the way back to pre-1970s. What can we see here? Well, we can see that during the 1970s, leading up to 1980, we had 10 years where the stock market went effectively nowhere. You can see that 10-year period. And you can also see the same thing again during the early 2000s, from 2000 to around about 2012 or 13. The stock market went nowhere. And on both those occasions, you saw a 50% drop there in 1973-74, and you saw another large drop of at least 50% during the year or two following the turn of the millennium there in 2000 to 2002. The recovery took place, and then we had another sell-off of nearly 60% there that took place following 2007, 2008. So very large drops for the stock markets, and those were capital rotation events. Capital was leaving the stock market and is rotating towards precious metals and commodities. You can see that on the gold versus SPX ratio chart, and this is critical to what is going to come next for precious metals. You can see the rotation taking place very, very clearly here. In the 1970s, you could see the very long period of downtrend there where gold was underperforming the stock market. Then it broke out, and then it outperformed the stock market. That was a capital rotation event. Capital was rotating away from the stock market and towards precious metals, and precious metals outperformed the stock market by hundreds of percent over several years. Then we went into a long downtrend again, and in the period around 1999 to 2000, 2001, 2002, and the years that followed, we saw another capital rotation event with the gold to SPX ratio breaking out above the critical 0.5 level, where gold is worth 50% of the stock market. And in today's terms, for example, if the stock market was at 6,000 and gold was at 3,000, then that would be 0.5. And you can do the maths to work out different values for gold and the SPX to achieve that 0.5 level. But here we are today, and that critical 0.5 level is very close to where we are now. When we see this chart breaking out above 0.5 and beginning to move to the upside, that is capital rotation evidence. It'll be evidence of a rotation of capital away from the stock market and towards precious metals. And as I've already said, what we're likely to need in order for that to happen is a large drop in the stock market. You can see the Dow to gold ratio as well. And on the Dow to gold ratio, same thing happened. 1971, huge drop here all the way to 1980. And that was the precious metals bull market in action. Rotation of capital away from the stock market towards precious metals. Then the stock markets began to rise and the stock market began to outperform gold all the way up until that early part of the 2000s, where again, capital rotation took place. Technical evidence gave a very strong signal that that was occurring, and off we went. Gold went up by hundreds of percent. It doubled, then it doubled again, then it doubled again. And gold, of course, ended up near $2,000 from a starting point of somewhere near $200 or $250. Now we're seeing the same thing. If I zoom right in to where we are today, same thing again. This chart is breaking down below its moving averages, below the Ichimoku cloud, below rising support, that red line, below the horizontal support. So we are already on our way to a capital rotation event. Even though the stock market hasn't suffered a major drop yet, the Dow has been weaker than the SPX, of course, and with gold strength, that means the Dow to gold ratio is already breaking down. We can see this capital rotation evidence with a number of other charts as well. You can see with gold versus inflation, we are breaking out. This is a sign of strength for gold. Gold is breaking out versus CPI. This is what happens during a capital rotation event. We can see gold versus US2 money supply, or perhaps I should say US2 money supply versus gold. So the money supply, when this chart rises, the money supply is outperforming gold. And when the chart drops, gold is outperforming money supply. And the same thing happens. You can see the gold bear market lows occur when this chart tops, and the gold bull market peaks occur when this chart reaches a low point. Okay, and you can see that we're breaking down from a high point. We've been rejected at resistance. We're breaking down. The technical evidence was strong a number of years ago, which allowed us to be relatively confident that the precious metals bull market was already underway, even though we haven't broken out versus the S&P versus the stock market. So there is evidence in other charts, in other ratio charts, to suggest that we have a precious metals bull market, even though we don't have that full capital rotation event taking place yet. We can see it with this yield chart as well, the 10-year yield minus the 2-year yield chart. This is other evidence of capital rotation being a risk, or capital rotation being likely at the moment. You can see if we look at the early 2000s, you can see those two events around the 2000-2001 period and the 2007-2008 period. This 10-year yield minus 2-year yield chart for US bond yields, you can see how when the chart went below zero with an inverted yield curve and then began to rise again, we had a major event. And those major events, those major stock market events, are what are very strongly correlated to capital rotation away from stock markets and towards precious metals. The risk of a major market event is rising at the moment. We now have a medium risk of a high impact event. And that is what I think, it's what we think is quite likely or very likely to be associated with the capital rotation event. And in fact, the 10-year yield minus the 2-year yield is already starting to get perilously close to that zero line. And that's one of the things that is associated with capital rotation. And the gold chart itself, the gold roadmap itself, is performing precisely as expected, with the move up towards this region between $2,500, $2,700, at which point we either break out and move higher and then back test, or we back test and then move higher. But either way, this capital rotation event appears very, very likely. So it's critically important, I believe, to be aware of these capital rotation events and to spot them when they're in progress.
Brilliant stuff, Kevin. A lot to think about there. Guys, remember to follow us, subscribe, and keep ahead of the news of Talking Trades.